Hey everyone, John Henry here from Slingshot Futures Trading Group. Today we're going to be taking a look at our weekly futures, stocks, and Forex outlook for the week of 8/2. So coming into this week off the gate, looking at the S&P, we're starting off with a very interesting scenario, and a lot of the index markets have a lot of really cool stuff going on right now. So the S&P had a couple days of pretty whippy price action. It whipped all the way back down, back up, back down. But if you remember last week, we were talking about how this area was a line in the sand, and the market needed to stay either above it to keep it going higher or below it to start getting that actual pullback to get some of these other previously earlier trapped sellers out. So what ended up happening? Well, the market ended up trying to break down. We had that really, really nice bear bar. Sellers tried taking it, and all that ended up happening was that batch of sellers got trapped in. Now, those sellers were offered a chance to get out of break even because the market rotated all the way back up, came all the way back down, gave them a chance to get out of break even, and then rolled all the way back up again. And if they missed that chance, the next time around it came back to the line in the sand just a little bit higher this time. And it didn't really give them a second chance at all, really, to get out unless they took a small loss. So knowing that sellers have been trying to get out, they got out of break even earlier, they got another chance, and then they got a kind of a bad chance, but close enough, not bad to take a small loss, I guess, if you're that wrong for 3 days. But we're seeing the buyers come in every single time, and they just keep smoking the sellers, just pummeling the market back to the upside. So what I'm looking at here is the fact that these sellers, if they didn't take these chances to get out, well, they're on the back foot right now, and if we start breaking out higher, that's going to push through a couple different areas. First off, that's going to make all of the sellers who didn't take that chance likely exit above that bear bar. But the other important factor of this is that the earlier bulls who got stuck in at the highs, this is their chance to get out at break even as well, or more. So we need to see these buyers getting out as sellers and get out of the way, right? Fill them all, get them out of the way, and then start going from there. Because if we can start rallying above that point, then there's a very good likelihood that we see a strong leg to the upside, while the rest of these trapped sellers down here are getting stuck, or previously the sellers down here. Either way, that gap open, that gap zone from the weekend, a couple weekends ago, is still open. It hasn't been filled in. The market did dip down and tap it a couple times, but never actually went through it, so that gap zone is still there, and kind of looking for a continuation move to the upside here on the S&P. Now, over on the NASDAQ, again, is a very interesting situation. Not very, kind of similar to the S&P, but not in a lot of the same ways. They kind of defended it in a little bit of a different way. So here we have a lot of accumulation going on again with the NASDAQ, and this is a lot more sideways, right? Very sideways price action, but to be fair, we're floating right ahead of that 11,000 mark. So it's not really a surprise to see the market kind of banging its head here. It's going to have a hard time getting through any major psychological level like that, just like what we saw at 10. Came up, hit its head, and just kind of kept bumping off of it until they finally were able to work through it. Now, 11,000 arguably is nowhere near as strong psychologically as 10,000. 10,000 is a whole 10. That's something that a lot of people will be having a lot more eyes on. So the 11 area, sure, it's right there. It's around the corner, but the fact that we're showing a little bit of resistance here, I think this is just front running ahead of that 11,000. But if we can break through that, then there's a good chance that we see this continue going up. Now, a few other things that really stand out is that we have a huge stop liquidation on the bottom. Now, a stop liquidation in this case, knowing that the market moved back up, that's a liquidation into an accumulation. Essentially, a lot of large firms, a lot of funds, etc., they can't just buy in, a bajillion contracts here because it's just going to make the market go crazy. So what they have to do is utilize large orders like a stop run liquidation so they can fill in the rest of the orders that they want to get in so the market can rotate back up. That's all that happened here. A lot of traders who are buying down here, trailing along the way, they see this nice obvious swing and they think, hey, what perfect place to move my stop in, then pop it right there. But if we go through the course material for you members, you know why that's a terrible idea. That's not a confirmed swing, right? They had to break the highs and they didn't. So the fact that they didn't means that this is a trappable area. That's a huge trappable area. And the market came down and they trapped it and rotated all the way back up. More than just that, not only did they have a huge liquidation/accumulation move here, but we also have sellers who are trying to get a move going to the downside back underneath, and they have failed. So knowing that they failed, they were given a chance to get out at break even. right? And any of those sellers that didn't get that chance to get out of break even probably exited as soon as that candle went engulfing to the upside. So a lot of the sellers are kind of out of the way. But even more interesting, the market broke away to the upside, and when it did pull back, the same entry point, buying above that previous bull bar, I know it's a daily candle, but buying that previous daily candle's high in this case, that was defended. So that shows us that buyers are actively defending their longs, and they are looking for a continuation to the upside. A lot of things can happen. I mean, we have the open a little bit later today, and all the earnings from the tech sector can make things go a bit crazy. But that's kind of the way that this is looking right now, that a lot of buyers are trying to get this thing to pump over 11,000. And who knows, maybe this thing goes Bitcoin style and we see 20,000. Right? Well, be selling the 20,000 hats online, I guess not outside of the house. Anyway, looking at the Dow next. The Dow is setting up a wedge. The Dow, out of all of the markets, has been the weakest for quite a while. They're hovering around that 25,000 area, and then they kind of pop up to 26, 27, then fade back to 26, then back to 25. It's just this big whipsaw back and forth. A few things that do kind of stand out. There were some sellers who may have gotten stuck here off of the range highs, right? A very obvious range high. We have an attempted move down. They try to go up. Fails. A lot of sellers are going to try to take that, and they got stomped to the upside. We're back to that same area that those sellers came in on and got them, right? We went through, we filled their break evens, and the market rejected all the way back up. Now you'll notice, although it's not exactly the nicest thing, when we compare this to the other charts that we were just looking at, same situation, right? They push through, they give them the break even chance, and then they miss it by just a little bit. That's usually when they start rotating back up. We're not at the wedge lows, so from a structural standpoint, we're not really in a big area of interest. I would prefer to see the Dow go a little further down. But given the context of what's going on here, it does make sense to see buyers potentially trying to push back a little bit. All right, so heading over to the stock side of things, PM is the first one. That's Papa Mike. Maybe you know a grandpa named Mike. I don't know. Papa Mike, PM. Working out very nicely to the upside and a really strong bull rally up. The thing that I really like about this more than anything else is this kind of funky bear sort of island kind of sort of gap. It's a really weird one. They gap down, have a huge bear day, and then gap up and break out to the upside, and those sellers are immediately squeezed. They come back, they allow them to get out of break even maybe halfway into the day, and then rotates back up. We're finally getting a halfway decent pullback after that trapping, and a lot of times the reason behind that is from a swing area, right? Buyers who are buying down here, they're taking profit at the highs. But now that we're seeing the sellers trying to come back in, every sell attempt has been met with buying. They push down, gaps down, closes up, right? They go to the next one, doesn't really go anywhere. Then it gaps down pretty far, even tries cycling down, and the buyers manage to still close it, at least at a doji. So they still haven't lost their grip yet, and that shows us that a lot of sellers are still liquidating when it dips, and that means that they're in the juicer. So I'm looking at this area between 77.62 to 75.43 as a potential buying zone, as long as we stay inside of here. You don't want to see it dip too far down. But seeing it stay around this area for an upside objective, back up really towards 80, but front running at 79.57, up to 81.34 if they want to start breaking out. TTC, this is one that we talked about last week a little bit, or it might have been in the members room, in the chat room, whatever it was. TTC was on the list, and it's still in the list. We've got a nice area of interest that's Tango Tango Charlie. Looking at an area of interest on this pullback, kind of looking like a bull flag, looking for a continuation move and a strong leg back up. There are a couple concerns in that we have this wide open gap here, but you'll notice this market does tend to be kind of gappy, and when it does gap, it tends to run after that move. Well, we have a gap and we have a run, so I'm looking for a continuation of that movement back to the upside. That said, it is something to kind of keep in mind. There is a little bit of an open gap here that it might want to come back and dip down to sort of fill in. That's what happened over here. So don't lose sight of this area. You might see a slightly larger dip down to 67. But really, the buy zone is going to be floating between 71.09 down to 68.42 with, again, that deeper mindset if they do want to pull back a bit further. Upside objectives of ahead of 73, rather, at 72.69, and then 75.10 back up through the highs or around the highs is going to be the next zone of interest. list. And then we have SMCI, Sandy Mike Charlie India, looking really, really good. Starting to rotate back up after the sellers had a pretty good push to the downside and that failed move down. All they managed to do, and why I say failed move down, sellers didn't get a whole lot done. We rotated down, went sideways for a little while, now we're breaking up. What I would love to see is a nice little pullback, breakout pullback style for a long. So it's not yet quite ready, but it's definitely on watch going into this week for some pretty good possibility on a nice little breakout pullback there. All right, and then finally over on the Forex side of things, the Euro USD first up on the list. We have had one heck of a rally. This thing has been a monster to the upside, all the way back up to previous major gapping zones. Now this is more of a swing gap, kind of the same mentality as a WRB. If you need a reference for that, I'll put a little post in the video there up in the top right corner. But that goes over WRB, or wide range body hidden gap areas, and this is one of those right there, where we had a very nice swing low and the market got hammered to the downside, and they created a nice little swing high shelf before another breakout move. You could even argue that it might end up here. So this is kind of the definite hot spot, or the hot pocket, if you want to stick with those. But we're beginning to get into that area of interest where we're starting to fill in that gap, and a lot of times that zone becomes a major area of resistance. Now, even more importantly, this actually is a major area for a measured move up target as well. Not only do we have major resistance just coming into previous structure, but from the most recent rally higher, we have a near perfect ABCD move. All the way back up again. They hit it to the top, and then a massive rejection. And looking at the rejection, this type of failure off of the highs, that's not a small bear bar. That is a definitive, we're putting the brakes on right now kind of bear bar. Now, this obviously has been going straight up, so I don't know anybody who would really want to sell that and be the first one of the party. But don't be surprised if you see sellers coming in underneath this for a bearish pullback. It might even be a failure. Location is everything, and we're right in that location. The top of that gap zone, measured move to the upside, and a gigantic bear bar to try to reject it and hit the brakes. That's looking pretty good to me. I don't think a lot of sellers are going to want to see the highs broken by much, and the objective is going to be back down towards, at least the moving average back towards 1.16 even, somewhere around there. Either way, this is looking like it's really primed up for a pullback. We'll see, right? The caveat to all of that, of course, is breaking below the previous low a day. We'll have to wait and see where it wants to open up. Over on the dollar yen had a very interesting situation show up. We have a potentially trapped bear area, right? And that was from a long time ago. The bears drive lower, they get stuck underneath it and rotated back up. They were never given a chance to get back out. Not once. This is the first time in, man alive, how long is that? Since March that they've been given a chance to get out of that bad trade. And, well, guess what happened? It didn't even let them out. It came close. This blue line is their actual break-even point. The black line at the bottom there, that's as close as the market came. It left that little bit of space right there, just nicked it, and started turning back up. And a lot of times when that happens, nobody's going to hang out and say, oh, well, I'm just going to wait for those extra 5 ticks. No, I've been waiting for 6 months for this thing to come back. Close is close enough. Get me out of this stupid trade. And if they don't take it on that dip when it starts going back up, there's no way they're going to hold on to it if it starts breaking above, and we end up with this gargantuan bull engulfing candle. Now, this was a very steep sell-off down to this move, and we do have potential structural lows in the sense of a channel. You can see the channel pretty obviously working its way down here, and I have this as a little bit of a dashed line because it's certainly not perfect, but it is there. Those things together are going to add a lot of emphasis to the buyers, and I don't necessarily think that sellers are going to want to be the first one to the party after seeing one of the biggest bull days that they've had since June. So seeing that, I would anticipate we're probably going to see further up price action, objective towards that 107 area for the dollar yen. And then over on the dollar CAD, Canadian dollar, they've obviously not been doing very well since March. They've just been kind of falling apart like the rest of the world, but this has a more pronounced channel working down, and this channel's a little bit funky because the high that formed up here was after that big blow off, and that makes things really awkward. You can't really draw it like this. You can, but then this doesn't really fit, and that's not in there, and this kind of goes through it. It's just sort of ugly. So if we draw it with this blue channel here, this gives us a nice high, and a nice low to work with. But even that, the market's kind of broken outside of. The only reason that I still have it on here is because when it broke back up, it held as support, 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 support. You kind of get what I'm looking for here. We have a higher low. They did not break that major low, and we're creating a little bit of a wedge breakout point now between two large structures. So what I'm looking for, I would love to see a breakout move to the upside and see it continue back up. We've filled in the big gap that's kind of been left open. That job is done. They've had more than enough time to get that job done. Now we have a higher low and a strong rejection point in a place of potential breakout. Man, you've got my attention. So I am looking at the dollar CAD for a potential breakout. I would like to see the upside. I think the upside has a lot more room to go, but realistically, the prevailing trend's bearish. So if it does start breaking down, we could be looking for one big drop to see if they can start gathering into this previous support down in the 1.3s. And that's not going to be very pretty if that happens, but we'll have to wait and see. So that's going to do it for the weekly outlook. As always, if you have any questions, comments, anything like that, feel free to drop them down in the comment section or shoot me an email, jhb@ssftg.com. Don't forget to check out the 3-day trial. It's completely free. All you got to do is click the link in the comment section or just go to ssftg.com. Right on the main page there, big green banner. You can click on the free 3-day trial and check out how we approach these markets. As always, I hope you have a fantastic weekend or what's left of it, and I hope you have a fantastically profitable week ahead. We'll see you all in the room, members. Otherwise, we'll see you in the next video. Thanks. Bye.